Okay, Gen Xers, let me ask you something. Have you ever noticed how the financial system seems to run on rules that nobody explained to us? How one single number can qualify you for something or cause you to lose it entirely? And one of those numbers is your modified adjusted gross income. And some Gen Xers, they don't even know it exists. And others, they're not using it to the advantage they could be. This number can become very important. So today I want to break down what exactly is modified adjusted gross income. Why does it matter? How the system uses this number and how you can actually adjust it. So let's get into it. Okay, first point here is why should Gen X care? For most of our adult lives, retirement advice has focused on one thing: build a bigger nest egg. But once you start looking closer, especially in your 50s and 60s, something else shows up. And suddenly, the only question isn't, how much do I have saved? But you also start asking yourself, how much am I leaving on the table here? The focus starts shifting on protecting what you've built. And the truth is that this number, it matters long before retirement. This income number, it affects things such as the insurance premium that you'll pay if you get your insurance, health insurance, through the exchange. It also affects whether or not you are eligible to contribute to a Roth IRA. It affects how much capital gains tax that you'll pay. It can also affect which tax bracket you land in while you're still working, because many of the same things that lower your modified adjusted gross income, like retirement contributions, HSA contributions, that can also lower your taxable income. And also when you turn 63, your Medicare premiums, they're based on what your modified adjusted gross income is. Because Medicare will look back 2 years to base your premium cost. So let's talk about what actually is modified adjusted gross income, or Magi for short. And the simplest way to think about it is that it's your income number after certain adjustments. Think of it as the income number that the government uses to qualify you for certain benefits or qualify you for certain tax breaks. It's not your gross salary from your job, and it's not the money that lands in your bank account after everything's been taken out, your net. No, it's not those numbers. It's a modified number, and everyone has one. And at this stage in our lives, you may want to do some things to adjust it, not just let it default. So depending on things like your retirement contributions or deductions, your Magi can be lower than your gross income number. And that's a good thing. And it's not trickery. And it's not, gaming the system. It's simply just how the tax system works. And here's the strange part. Most people, they don't even really learn about it or know what it is until it's already affected them. That's how it was for me. So why would someone want that number to be lower than their gross salary number? Because a lower Magi can qualify you for certain benefits or tax savings that the higher gross salary number would disqualify you for. And let me just give you a real world example here. Let's use ACA health insurance premiums. And this is where things can get a little surprising. Now, if you get your health insurance through the Affordable Care Act, your Magi plays a major role in the cost of that premium, because your Magi is what will determine the amount of these subsidies or credits that you'll get that go toward the premium cost. And we're talking about a difference of thousands of dollars a year that you could save if you can take your gross income and shrink it into this Magi number. Think of it as, okay, I can either pay $1,000 a month for my health insurance, or I could drop that health insurance premium down to $200 a month if I put $500 or $1,000 into my 401k every month. Would you rather pay that extra money for your health insurance premium, or would you rather that extra money go into your future in the 401k? Now, I'm just giving you crazy numbers. Everybody's health insurance premiums are individual, and how much you need to put into your 401k to cause these numbers to drop varies, but it's not astronomical numbers that I'm talking about. And you can certainly play with it when you are reapplying every year for that ACA coverage. Now, I'll tell you something that happened to me personally a few years ago. I've been getting my insurance through the exchange for several years. My employer does not offer health insurance, so I get it there. I got a raise mid-year from my job. So come tax time, I am putting that new gross salary number on my taxes, and then, the IRS says, hey, wait a minute. We gave you way too much, subsidies on your health insurance because you told us this lower number. Now you've gotten a raise. You've got to pay those subsidies back. Now, had I known this in advance when I got that raise, if I had taken that amount, whatever it was, and shifted that into my 401k or an IRA or an HSA, then my Magi number would not have changed. Even though my gross salary had increased, I could have managed that Magi number and not paid back those subsidies. Now, I did deflect some of that by contributing last minute to a traditional IRA, but not all of it. It would have been much better had I controlled it at the point of impact. And this is why everyone who gets their insurance through the exchange, they should pay close attention to their modified adjusted gross income number. Not just once a year, but throughout the year. Now, what are some other things that Magi affects? Because that's what makes this number so interesting. It doesn't just affect one thing. It affects multiple parts of the financial system at the same time. For example, it could affect your eligibility to contribute to a Roth IRA. If your income is too high, direct contributions to a Roth IRA may be disqualified for you. And that could be a lost opportunity to put $8,600 every year in a tax-free investment account. But if there's a way that you can lower your Magi number below that threshold, then you might be eligible. Another thing that it affects is capital gains tax rate. Now, if you sell investments or stocks, mutual funds that have gone up in value, that profit, that's called a capital gain. And depending upon your income level, those gains, they can be taxed at either 0%, 15%, or 20%. So someone with a lower modified adjusted gross income, they can pay little or zero taxes on those capital gains. Another thing affected by it is Medicare IRMAA surcharges, because higher income, it can trigger those IRMAA surcharges, and Medicare will start looking at your income numbers at age 63 because they always look back 2 years. So be sure to pay attention to this because Magi becomes this lever in that system. And once people realize how many different things can be affected by this number, usually the next question is, well, what can I do to affect it or modify it? And there are a few common things that can influence that Magi number. So let's talk about it. Okay, first let's talk about how you manage that number if you're still working. Now, most people, the most common ways to lower your Magi is by contributing to your 401k, 403b, traditional IRA. You can also contribute to an HSA if you're eligible. That will lower that number. Another way to do it is taking advantage of self-employment deductions that you might qualify for. Timing matters as well. If you're thinking of selling off some of your investments that would cause a capital gains tax hit, maybe timing it in a year where it doesn't affect you as much. You have control over that. Now, the goal here isn't to be obsessed over this number. The key point that I'm just trying to make is to just be aware of it, be aware of the ways that you can adjust it, because once people understand it, they start realizing that income planning can be just as important as wealth building, because it's an indirect way of preserving that wealth. Okay, now let's talk about managing that number after you've already retired, because you may be asking, does my Magi matter after I quit working? Are there ways for me to adjust it? Do I care? And the answer is yes to all of that. But instead of controlling, your wage income coming from your job, now you're controlling income from different sources that include withdrawals from retirement accounts, selling investments, or deciding when to claim Social Security, purchasing health insurance before Medicare kicks in. And some retirees, they spread their income across multiple years so that they can manage that modified adjusted gross income number. Others, they draw from a mixture of accounts. They may draw some money from a Roth account, some from a tax-deferred account, some cash. When you use different income sources, you can manage that number even more. And the goal here is to avoid unexpected income spikes, like taking out big lump sums all at once. And that's one good reason that at that stage of your life that you work with a financial advisor or someone who can help you plan out those withdrawals. Now, why do I think this topic is so important for Gen X? Why did I want to do a video on modified adjusted gross income? Because I feel like a lot of us Gen Xers, we're behind where we want to be when it comes to our retirement saving and our planning. We may be at the stage in our lives where we're earning more. And this is a topic, this is something that I didn't know much about. And although I am not an expert by any means on this, my goal is to just stir the pot a little bit. And if this is something that maybe something you think you could benefit from, you'll hire a professional financial advisor, or you'll do some more research. You'll get creative and find ways to make this number work in your favor. Many of us, we want to retire at 62, or some have already retired earlier. And the thought of paying expensive health insurance premiums frightens many. But I hope this video gives you some ideas that it's not a hopeless situation, that there are possibly some things that can make a difference. We can retire with flexibility instead of just having a rigid plan. Preserving our wealth and safeguarding our income becomes extremely important at this stage in our lives. And no matter where you find yourself right now, whether you're still working on that nest egg, still working in your 50s, or maybe you've already retired and you're managing, your income from different sources, I hope this video gave you some ideas on some levers that you could possibly pull to give yourself a more favorable and different outcome. So I'm curious, do you do things to intentionally lower your modified adjusted gross income number? I'd love to hear about it in the comments. And also, if you have questions on the realities of living off of a 401k in retirement, I did a video on 12 questions with answers on things from, how much do I need to how do I plan for taxes? I've linked it right here. Okay, my Gen X community, we've talked about some serious heavy stuff today. So I sincerely hope that the rest of your day is way more fun. Now Benji and I, he's right there looking at me. We're going to go for a walk after this. So thanks for hanging out with me today. I'll see you in the next video. Bye.